you, Max. Good afternoon. My name is Zach Duprey. I am the director of the Search Fund Lending Center at the Provident Bank. And the Provident Bank is a full-service commercial bank in Massachusetts where we lend nationally, and we focus on traditional and accelerator search funds. And our goal in the space is really to work with searchers in a way that creates a mutually beneficial relationship so that we can support their long-term growth and be a partner for their success going forward into the future. And today's panel is a group of investors who focus in the traditional and accelerator space. And I'll introduce the panel, and then we can talk about our theme for the day. So Timothy Bovard is the founder of Search Fund Accelerator based in Boston. Tiffany Augustyn is a partner at Endurance Search Partners. We have Michael Prober, a professional investor from Clovis Capital. Kevin Oxendine, representing Pacific Lake, the largest fund in the traditional space. And then Mark Egan, a longtime investor in the traditional search fund space. Today we're going to talk a little bit about how investors engage with search funds from that pre-search and selecting searchers to work with from the get-go, during the search and what those interactions and the mentorship and best practices look like, investing in the deals and what they look for in the searcher, the deals, due diligence, and then post-acquisition, what that looks like in terms of board, mentorship, and ultimately operating, as well as exits. So what I'd like to start with is, in terms of selecting searchers to work with, I know, Tim, at Search Fund Accelerator, you guys have a different approach where you vet a number of candidates and select a cohort, a small group of individuals that you guys will work with until they find a deal. Can you talk a little bit about your process and how you select searchers to work with?
Right, so actually, well, strong. We don't select searchers. We look for future CEOs, so people who really have the conviction that they want to buy a company and run it as a CEO and you know, not do deals. So I think that's the very first criteria. And then we look for, I mean, we have in-depth discussions with them because we're talking about a 7 to 10 year business partnership, and so we think it's really important that there's a strong fit in culture, in you know, looking for the mentorship that we provide, and that we of course believe that they're going to be a great operator of a company. So it's a very involved discussion process in a two-way sense, and so far it's worked out remarkably well.
And how many searchers do you look to work with every year?
In the past, we've done, like in the last cohort, we brought in 5 searchers. Probably in the next cohort, we'll have 8, because we just opened a second office in New Orleans after the first office in Boston.
Great. And Kevin, by contrast, Pacific Lake is the largest fund in the traditional search space. How many searchers do you guys work with in a year, and what does that selection process look like?
Yeah, so first of all, just thank you for having us today, Zach, and to the organizers of the Booth Kellogg Conference. Delighted to be here, and thank you for having me on the panel. So Pacific Lake, we tend to back somewhere around 15 folks every year, 15 to 20. Recognize that we are one of many investors that each of those searchers actually puts together. And in our process, we want to get to know you. We look very similarly at it as Tim does, which is we're entering into a long-term partnership that's going to last many, many years. And the first criteria we really want to understand is, why are you motivated to do this? Do you want to be a CEO? Are you motivated to lead people, to build a great business? And what is that burning passion that you have? We want to understand your intellectual curiosity. You have a bias to action, but a bias to action in areas that you know are going to be attractive, yet a humility that you want to surround yourself by talented folks in your investor group, in the company that you're going to build with the team that you put together, so you can actually build a really great business. And the last part of it is, are we aligned on what success looks like? The way that you intend to pursue your search, the type of business that you want to acquire, is that a place where we can be helpful and meaningfully bend your success rate as a searcher and then as a CEO?
Thank you, Kev. So Mark, you've been investing in the space for a long time. What are you looking for when you're evaluating a searcher in terms of their thesis when they come to you about what they really want to accomplish? How do you guys go about that?
So I would say the search phase is the hardest part for us to evaluate. We have about 55 active searchers now, 35 in the US and 20 internationally. And typically that just evolves through, I mean, we don't have metrics there at the search phase. That comes from spending time with folks, meeting them, talking to them, and kind of all the searchers are very different. So people have different industries they like, different regions they like, and frankly, we kind of have no clue at that stage, you know, who is going to find a great business. I would say once we start looking at deals with people, and then once we make investments, we get much more metric driven and kind of have a sense of what we're looking for. So I apologize for not a great answer, but I would say that the search phase is the toughest part to kind of evaluate and figure out who's going to find a great company. Because part of it is so many of the people you meet are extremely smart and motivated, and so that part is tough, but when we see deals, we kind of know a lot more.
Great. Now, Michael, you don't invest in direct searches very often, mostly in the funds that do search. What do you think is the challenges that have evolved amid the rapid growth in this ETA ecosystem?
Well, I think from my perspective, just to give a little background, I ran an investment firm for almost 20 years, and the key to making money in investing is don't lose it. And so what I found with search and the growth in search, as an individual, that's where the investment started. So we had professors, we have individuals, it really wasn't institutionalized. And so I started out looking at investing myself, and what I found was all the different decisions that Mark talked about in finding a searcher to all the way to exiting. There's like 20 or 5 different decisions that you have to make. Very difficult as an individual. So I've allocated capital out to folks like the people on the board to do those decisions for me. And I think, to answer your question directly, as it's gotten more, search has gotten grown, and we have 600 people here, the number of transactions you have to look at, the number of people you have to look at to be successful and not make a mistake, and going back to what I said first, not lose money, has increased in complexity. So I think for me, allocating out has been one way to really combat, let's say, the growth or really hedge my risk in the growth of the industry.
So once searchers are selected, I think a lot of people wonder what that should look like. While I'm searching, how do I interact with my investors? So Tiffany, at Endurance Partners, how do you guys, what does the relationship between you and a searcher look like during that search phase?
Sure. So Endurance has been investing in the search space for the better part of the last decade. And over that time, we've invested in or partnered with over 125 searchers, including about 25 searchers this year. Have been very actively involved in the community, as has everyone on the panel. I think in terms of what that's looked like and some of the learnings in terms of how that interaction can work best, what we've learned is the extent to which we're highly responsive, responding to searchers' needs as they arise, and highly engaged and probably, very candid and direct. So not sugarcoating things, maybe not as candid and direct as my colleague here to my right, Tim Bovard, who's very candid as well. But we like to, provide direct and early feedback on deal opportunities. So in terms of what that looks like over the course of the search, when a searcher is, just starting to look at a deal, we'll provide feedback, in a matter of days, if not hours, in terms of the opportunity. We will help build and look through the operating model. We actually jointly developed with Intrinsic an operating model that you can find on our website that I think has been helpful to a number of searchers. We'll help negotiate credit agreements. We will often meet with sellers if that's necessary or helpful to the searcher as they're trying to build their credibility in a process. We will help review and look at 100-day plans for post-close or think through sort of the value creation planning for a searcher. And then as many investors or some of the more active investors, we will, be very open to serving on the board where there's a fit. We've served on over a dozen search-related boards over the last 10 years. Really enjoy that process. At the end of the day, we do this because we're passionate about working with searchers, really talented searchers, so the ability to partner in a more formal way involved way in the context of being on a board is something that really excites us.
Great, and Tim, how is that different with SFA, where the searchers are working as a cohort together in your facility?
Right.
What does that look like?
I think when you join SFA, you start with a 3-week boot camp where we transfer to the searchers all of our accumulated best practices, techniques, and technology that we've developed. We actually help them launch their search, and they start a bonding process with their fellow members of their cohort, the other searchers, and then with the SFA team. And so that gets them launched in a very, very accelerated manner. And then when they're finding things, the feedback is instantaneous. They just can walk into our office and talk to any of us at any time because we're all co-located. And then more importantly, even, I would say that they have their own members of their cohort. And that becomes a force that is not only useful throughout the search, but also, of course, once they're CEOs, because they'll end up owning small parts of each other's company. So they bond together tightly as a cohort. But we help them think like an investor, help them kill deals quickly and focus on deals that they should be moving forward on and doing so successfully so they don't have a lot of failure along the way. We have due diligence partners, we have a banking partner next to me. So we help them get that deal done quickly and efficiently. And in terms of equity, we have a fund of committed capital each year that is immediately accessible to them. So you don't have to go out and re-raise equity to complete the deal. And so once they are CEOs, we know the deal incredibly well. We know the searcher, now CEO, incredibly well. And I think it positions us to be very effective board members, and we have a really trusting relationship with our CEOs that has proven to be quite valuable for both.
Thanks, Tim. And Kevin, with Pacific Lake backing 15 to 20 searchers a year, how do you guys allocate resources to support those searchers? Do you individually handle 3 to 5 new searchers? Is there, who you align well with, or the industries you're looking at? How do you guys look into that?
Yeah. And so we actually have 15 full-time members of the Pacific Lake team who exclusively invest and spend time in the search fund world. This is the only thing we do. And because it's our roots, one of our founders did the first ever search fund in Jim Southern. We've been doing this for 10 years. So we're just fully committed to the search fund world. And what that means is there are just a ton of resources when you actually think of that large team committed to only about 15 searchers a year in helping them through the search process. We do not have a bureaucratic process of like how we manage relationships. Instead, it's really organic. And the great thing about that is we have experts across the board in a ton of different industries who can help regardless of what business you're looking at. We can help advise on search strategy. So when searchers are first starting, they'll come and spend a couple of days with us as we'll help them get up their learning curve really quickly. Because if you can get up that learning curve, it's going to help you just be a heck of a lot more efficient running a great industry thesis-driven search. The same team will be engaged from a board standpoint, from an ongoing operating standpoint, and actually have a part of our team called the Value Creation Team led by Richard Reese. Richard is the guy who built Iron Mountain from $3 million of revenue to $3 billion of revenue. And he partners as a mentor to CEOs and also has a team of folks who function as consultants who will go in and advise and work on high priority projects with the CEO. So with us, it's, you get the entire team, and a lot of it comes down to what is your need and what are the relationships that you have built that you're most close to on who you call first. But all of us are there and eager to help.
Great. And Mark, when you're working with searchers for all these years, what do you think the biggest mistakes are, trends you see searchers repeatedly make that are mistakes in the process of finding a deal?
Yeah, I think the biggest thing is for, as my father says, it's a selfish exercise. So I think the best thing searchers can do is really think about, rather than reading the Stanford study or coming to the booth conference and sort of following what people have done before, is really trying to personalize and think about. I think Tim brought it up, Kevin brought it up here. It's where and what type of business do I want to be the CEO at? It's ultimately about finding one great company and operating really well. So I think, not enough people don't always look internally and really think about what is the best fit for them. and they spend too much time kind of thinking about what other people have done, or how do I replicate a success somewhere else.
And do you think that results in poor deals getting done, or just time wasted on
No,
deals?
what's interesting about it is I don't think it's, what happens is you don't have poor deals, you have mediocre deals. And one of the worst part of the search worlds is, my father and I think Kevin said it, of what does success mean? Success for us is when the searcher hits their hurdles and becomes the largest shareholder of the business. And that's really what we think about success meaning. So I could go on forever, but.
Thanks, Mark, appreciate it.
Zach, can I add something? Just as you're thinking about the biggest mistakes folks make, the one that, and I agree with Mark saying, but the thing that I see is when someone who's a search fund entrepreneur, underscore entrepreneur there, instead behaves transactionally in a search process.
Exactly, yeah.
Because if you behave like you are a private equity firm, an actual private equity firm will eat your lunch every day of the week. You're an entrepreneur who's passionate about leading a business, and you have to lead with that and build knowledge in an industry and build relationships with sellers. And so you become an expert so that you are a preferred buyer for a business. We see that folks who search in that way, focus on an industry, develop relationships, not a transactional approach, acquire at twice the rate, and the companies they buy are growing twice as fast. So you're much more likely to buy a great company. And that all comes down to building relationships, being focused and strategic throughout your search.
That's exactly what I was trying to say.
That's what I heard, Mark.
Thank you, Kevin.
When somebody does find a deal, we're hearing a lot that private equity is coming down market into this space. It's increasing multiples. Michael, as serial investor, what do you think of the current valuation environment right now in sort of the middle market then in this ETA
I don't like
space?
the word serial investor. It sounds like I'm a serial killer.
No.
Or you like
Okay.
Frosted Flakes.
So, all right, so one of the things I like about search in general, the industry, is that multiples have remained pretty low. So there's a huge amount of operational risk, CEO risk, business risk in these businesses. And if you could buy businesses at 5-6 times cash flow and you lever them 1 to 2 times and you're even mediocre, you should make money. The problem I have with investing in some middle market LBO firms, and sometimes in search, if you move up to the 8, 9, 10 multiple range, there's not a lot of search deals that are done like that, but there does put an increased financial risk on the business. And the managers who are here, you're going to make mistakes, you're going to slip, your egos are big, you think things won't go wrong, and if you listen to any of these panels before us, the non-investment panels, there's one thing in common, which is something always goes wrong. And if you could have it go wrong with not a lot of debt and not pay a lot for the business, I think that would be helpful for the investors.
And so when a searcher comes to you with a deal, Tiffany, what does Endurance Partners, what does their process look like in terms of evaluating the deal with the searcher? Is it fit as a CEO? Is it just the underlying asset that you're really focused on? How do you guys look at that?
Yeah, I mean, I'm not sure there's anything revolutionary about what I'm going to say, but it's, I think we tend to be very much straight down the fairway traditional search investors. So a relentless focus on high recurring revenue, ideally 60% plus. The nose of the plane is up, meaning there's tailwinds in the business and ideally in the industry. It doesn't have to be growing double digits, but the nose of the plane is up. It's very difficult to fly a plane into a hurricane, so keeping that in mind. And a high degree of profitability and inherent operating leverage in the business, which is really just an indicator of how efficiently the business can scale. I'd say those are the 3 core things, and then obviously valuation. And I would, echo what Michael's saying. Even though there's a lot of chatter and talk around, all of the searchers out there and all of middle market private equity, I think what we're seeing is that helping us more than it's hurting us. And where we're seeing that helping us most or helping our searchers most is really on the back end of deals. Because I think there's been a proliferation of sort of $200 million to $1 billion funds out there, fueled by LP demand to put capital to work in the private equity space. They're pushing capital into those funds, and they're buying these assets at 8 to 10 times on the back end. So what we're seeing is I can't be exact about it, but roughly 50% of the value creation that's happening in our recent exits is coming from that multiple appreciation on the back end because of how many lower middle market and middle market private equity firms want what we're creating, which is great businesses and great CEOs who can go on to continue running those businesses for them. So, I think it continues to be a really exciting time in the traditional search space.
And so when a searcher does have these deals, in terms of, Mark, how much influence do you have on the ultimate go, no-go decision? If they come to you with a deal and you love it, don't like it, anything in between, how much influence do you guys have in that process?
I mean, we typically are a small investor, we take a half unit in most deals. And so I think, to some people, our feedback means a lot, and to some others, it doesn't mean as much. And I think that's one of the kind of the great pieces about this space is that you have multiple investors, and so what might, sort of fit one person's appetite doesn't necessarily meet, other people's appetite. So I think, I think sort of everyone here is we've looked at, Kevin and I or Tiffany, we've looked at deals together, and some we've done together, and some we've I've passed and they've done, or vice versa. So I think that's what's really interesting about the space sort of maturing and where it is now is there's kind of an investor out there for any deal you find, if it's a good deal.
And so Tim, it's a little different at Search Fund Accelerator. How do you play into that ultimate decision?
It's very collaborative. Contrary to what people might think, there's no investment committee. Nobody's putting together an IM and then presenting it in front of a panel of judges, black robes and white wigs or something. It's very collaborative in the sense that as the search is moving forward on a deal that they have under LOI, we're constantly working with them and asking them about different aspects of the deal, having them dig into not only potential risks, but of course, and primarily looking at the growth thesis and how they're going to take that business and multiply it by 4 or 5. And so every day that deal moves forward, then we're just confirming that we're going to go forward with the acquisition. And if something is uncovered that is unfavorable, I think our largest contribution to this is to help searchers avoid becoming victims of confirmation bias and the anxiety that they're going to feel throughout the search, but particularly later on in the search, because there is a sort of this notion of, I'm a smart, successful guy, I'll figure it out, I want to get this deal done and we'll make it a success. And so I think we help really hold people's feet to the fire because there's just so much contact, so much knowledge and complicity, and all that being sort of in a wrapper of our incentives being perfectly aligned together.
And so Kevin, when you guys are looking at a searcher backed by Pacific Lake, they have a deal, they're doing their diligence. What diligence are you guys doing? Is it independent of theirs? Are you just kind of advising the diligence that they should be doing? Can you talk a little bit about that?
Yeah. So I think that the first thing is we look at the deal through the eyes of the searcher throughout that entire process. And so we're not in the driver's seat, but we like to be in the passenger seat as someone who's helping you along the way understand what are the really critical questions on what matters in this business. And our first question is, what happens if this goes right? Could this be a compelling outcome for you as the entrepreneur that's worth you, taking the one bullet you have in making that shot? And if it is, how do we validate that and increase conviction alongside you so that you can make a great decision on whether or not to acquire that business? We tend to rely on an expert network and a group of folks associated with Pacific Lake to help bring outside perspective there. We'll support in your modeling efforts. We will help do diligence right alongside you. And also sometimes folks on our team will do some diligence on the side, which will then supply to the searcher. But our goal is not to make any decisions independent of the searcher, but to support and empower him or her to make a really great decision, because really that person's the one in the driver's seat.
Right, and so when a searcher finds a deal, they close that deal, and now they're a young, inexperienced operator. Mark, what are you seeing as typical behaviors that have consistently resulted in, above average or great returns? What are those CEOs doing really well?
Yeah, once they've acquired the business.
Correct.
Yeah, I think for us, one of the key things is getting kind of the accounting, and just the back office stuff in shape. I think, you know, because the model, you're required once you buy the business to grow. Growth is a necessity, but we see people often try to grow before figuring out what they actually own and what they have. So I think the real key when you get in there and buy the business is to really understand the company, understand your employees, understand your management team and sort of who you have, and then get the, you know, the accounting and the KPIs in shape so that you can actually figure out where you want to grow efficiently. That to us is really the key at the beginning.
And Tim, in terms of board construction for these young entrepreneurs, is there things that you guys like to see in terms of makeup of that board?
Well, first of all, we, in conversation with the CEO, a couple members of the SFA team will be on the board, obviously, but we also have incentives for them to go out and get 2 independent board members because we don't want to create a system of groupthink, and that can be board members coming from our LP base, or it can be board members that they've gone out and sourced, like one guy, John, had during due diligence struck up a relationship with the CFO of the largest company in his space who is retired, and he came and joined that board, and in fact joined another board because he's turned out to be very helpful. So it can be people outside of SFA's network or people among the investor base, but it's people who really bring something very strong to the table and have an intimate knowledge of the business.
And Tiffany, how does Stern Search Partners look at their role as board members? Are you guys looking to be on boards regularly? Is it only on certain size or types of deals?
I think for us, the key is there a fit? Fit defined both in terms of sort of an affinity from a sector perspective, you know, so areas where we spend a lot of time, but also probably more importantly is there just an affinity in terms of a relationship that we've developed with a searcher over time. And that's just organic, you know, it's not with all of our searchers, it's just, you know, kind of where that evolves, then, you know, we would be happy to step into a board position. I think what we seek to offer is, you know, the ability, hopefully, for the searchers to leverage the operating experience. Less on my side, I'm just an investor, but, you know, particularly with Rich and Larry, both of whom have been longtime executives. You know, Rich has been a day in and day out CEO for over 30 years, running 2 very large now national business services businesses. So I think in terms of thinking through how to set up a sales team, how to do their first firing of someone, how to hire someone, how to really build their organization, set up bonus structures, you know, all of the sort of organizational building blocks that you'll go through as a CEO in professionalizing your business. That's where, you know, we love to engage in a way that, you know, we hope is differentiated and helpful.
Great, and then, you know, Kevin, there's been a lot of recent big exits that people are aware of, and can you talk about, you know, some of the key factors in those high-level outcomes?
Yeah, there have been just some really phenomenal outcomes, and a lot of credit to the search fund entrepreneurs who, you know, went out and found those businesses and then grew them. The first thing is you just can't underestimate the power of a talented, motivated, hardworking person, you know, who follows the search fund path and steps in to that CEO role. And it shows the opportunity that all of you have who are considering searching today. I think the first thing that I've noticed is they all decided to fish in good ponds. They focused on buying in a great industry. You know, to paraphrase Warren Buffett, every time he has seen a great manager meet a bad industry, the industry keeps its reputation. So they've bought in good industries. They then put together a plan with the support of engagement of investors and board, and built a team to really be able to take advantage of the opportunity in that industry. Anytime you step into a CEO role and you've never had experience before, you start off where the business is running you. And these are CEOs who were able to quickly transition to a spot where they were running the business and then ultimately leading a team that was managing the business. And that's a hallmark of someone who's been able to spend time thinking about the next opportunities on how do you take a business that's already scaling well and get it to the next stage of growth. So it's that humble person who goes in, who builds a great team of investors, advisors, and a supporting cast inside of that company. It's focused on a really great industry, who then creates the opportunity to think about the long term.
Right. I know they want to open up to Q&A for the last 10 to 15 minutes, so we would like to open that up for any of the investors on the panel if you'd like to ask a question at this time. We have two people in the audience who will be bringing microphones to wherever you are. We got one. All right.
Hello, my name is Jorge Montoya. I'm from Colombia, and I will ask a question regarding international search funds. So, I would like to understand from your perspective, what do you consider when you back an international searcher, and also when you back an international investment, if you do that?
I'll go ahead. We have 20 searches internationally, and I would say it's the same as the U.S. We just meet people, and so where they are from is the people. When we meet people, that kind of leads us where we go. So we've kind of just ended up doing international searches because we've met great people.
And how much of your portfolio, Kevin, at Pacific Lake is international now?
Yeah, it's probably somewhere in the teens. We back searchers internationally routinely. I think similar to Mark, we are interested in meeting folks who are passionate about becoming CEOs and are building a thesis and eager to go out and lead that path to build a great business, and whether that's in the United States or outside of the United States. When looking at a company outside of the United States, I think it is important to understand the risk factors related to that company as well as in the country where that business is being acquired. And so typically in a business outside of the United States, there is some risk premium that should be factored in to what that acquisition looks like. And the burden on having a high quality business is even higher because you are taking on potentially currency risk, macroeconomic risk, political risk, depending on the country. But we are excited. There are a number of companies that we've backed outside the United States that are absolutely phenomenal businesses led by great CEOs. But those factors have to come together in a way that makes sense.
Yeah, and I would agree with that. I mean, it's definitely, it adds a layer of complexity when we go outside the U.S. But the point I really wanted to make is that, Colombia, for example, in the search world, we would never, get really excited about a specific country and then look for a searcher. It always works the other way around.
Great. Other questions? Yes, all the way in the back.
How do you deal with the rate of failure in two stages? So we're looking at a searcher going after the process. How do you deal with a searcher who can't find or close the deal? And also how do you deal with failure and what's the rate thereof? Once they find a company, if they're not seeing a growth rate or they're just flat or worse yet, the company declines after they take over.
You guys going to say something able to answer that question?
Well, I mean, I'll give my answer to that, which is we created Search Fund Accelerator to help decrease the failure rates because according to Stanford, 30% of searchers fail to find a business. And what do? Is we help them ramp up their search that much faster. They're seeing that many more companies. They're making decisions on those businesses much more quickly, so they're seeing a much larger N. And it is to a large part a numbers game. There's also luck, as we heard earlier. So I mean, we're doing everything to combat that. And then while there's a nominal 2-year search period, we're willing to back searchers longer than that, as long as we're convinced they're going to be great CEOs, because we know there's a luck factor. Post-acquisition, I think the best way to combat failure post-acquisition is to combat it pre-acquisition and to really do extensive due diligence, honest due diligence, and really have a well-mapped out growth thesis for that company. And if you do that and you do it professionally and diligently, I think the failure rates would drop significantly post-acquisition.
The biggest thing that we see driving failure rates, in our opinion, is bad time management. So searchers spending time on heavily competitive brokered processes, where they really run down the rabbit hole of spending several months on something to the exclusion of all else, and then they've wasted, 6 months on something that probably had a pretty low likelihood of getting done. When we see that, or we start seeing a searcher go down that path, we are very candid, we're very direct. We try to, make them realize that, the success rate is, close to zero in situations like that. So that's something that, we really try to manage. But, as Tim alluded to, there is a lot of luck in all of this. It's unfortunate, but, it's inevitable. So one of the things actually we're doing more and more of, I think given kind of the level of competitiveness in the space, and also some of the searchers or search CEOs pursuing more aggressive growth strategies than maybe they did before, is we've been really actively trying to find opportunities for some of our searchers who don't find businesses to buy, to partner either with other searchers looking for businesses or other current search CEOs who really would benefit from a partner. I think that's a broader trend a little bit that you're starting to see more in the community, sort of an orientation towards partnership search, again, particularly in areas that have the potential to pursue more aggressive growth strategies. So that's just one area where we try to be helpful on the back end when a searcher doesn't find a business.
And I wanted to add one other thing to that. I think, failure is not the best term for it, because the goal is not just to buy a business. The goal is to buy a great business. And we've seen a lot of people that have spent 2 to 3 years looking for a great business and have found a lot of good businesses. And we've been really pleased that they, that they didn't step up and buy a mediocre business. So I just want to be careful with the term failure, that we've seen a lot of people do the 2-year search, not find a business, and you'd be shocked with the jobs and the outcomes that they've had. So I just want to make that clear, that the goal is to really find a business that is great, and that is not easy to do. So sometimes failing is the best thing you do, because because if you buy a mediocre business, those are the worst scenarios where people are stuck for 5 to 8 years of their life in a tough situation, and we know those people very well, and that's not fun. So I just want to make that clear. It's great to find a deal, but find a great one.
So in addition to focus industry conferences, what do you think the best uses of time for searchers are?
Good, Kevin. You take that one.
And this is while you're trying to decide whether or not to search, or while you're actively searching? While you're actively searching. Highly recommend, and you're hearing a trend here, is that your goal is to buy a great business, not to buy a business.
And what we've seen, and we dug into the data of the last 50 searchers who came to a terminal event, whether an acquisition or they actually shut down their search fund. And we looked at, and we broke that out and said, okay, the folks who followed an industry thesis-driven search, where really developed a deep knowledge of an industry, built a network, developed river guides, went to the conferences, talked to owners who weren't even necessarily sellers to get smarter on the industry so that you can be a better buyer. And we said, what are their acquisition rates versus folks who follow a more opportunistic or scattershot approach? And they're 2x better. So when you're in that mode of searching, it's not about how many emails can you send. It's about how much smart can you get into an industry, and what type of network can you build so that you become a preferred buyer. Because if you become a preferred buyer, you're not competing against that private equity firm. You end up in a proprietary process where the seller who sells to you is only considering selling to you because, one, he or she sees something in you that they really like or saw in themselves when they were younger. Or number two, you have an expertise and a knowledge that inspires confidence that you'd be a great steward for that business, those employees, and those customers. So spend time, get smart on an industry, spend your time there, develop the relationships, and become a preferred buyer. That's how you buy a great business. It's not through a scattershot approach or looking at broker deals that come in.
To add to that, it's a great question in terms of how best to spend your time. One thing searchers, we hope keep in mind, but sometimes they don't, is you're not just underwriting the industry or the opportunity. In any given situation, you're really also underwriting the seller's willingness to sell. And I have to say, if I look back over the course of the last year, in terms of the situations that were most disappointing, I think for the searcher and for us, it's where at the end of the day, it wasn't a real seller. And maybe they spent 6 months, they got to the end of their search, and they didn't buy the business because the seller actually didn't want to sell. So spending your time trying to work that and trying to figure out, okay, have you already thought about, as a seller, how you're going to spend the proceeds? If they have, that's good. You know, so just sort of looking for those angles is really critical and will really save time, you know, from situations where, you know, at the end of the day, a person really doesn't want to part with their business.
Mark, you mentioned that you don't necessarily know the quality of the searcher until they start bringing you deals. Can you talk about maybe, this with others, can you talk about maybe some of the common mistakes people make when they're starting to bring their first deals through that just maybe just doesn't make sense? Can you comment things there?
And I'll start. I think the goes back to one of the things Kevin said. I think it's, you know, what does success mean? And so I think sometimes you look at deals and, or people bring you deals and it's almost like they're private equity deal, or Tiffany brought it up, they might find a broker transaction. And so early on, you know, my father and I are pressing people most of the time and saying, how well is this going to work out for you? You know, this seems like a decent investment, but are you going to do really well here? And what does the growth look like? So I think early on, I think, you know, kind of getting people focused on, back to what I said earlier, that this is about them, this is their journey, and as much as they can articulate to my father and I how it's going to be a really successful journey for them, if we buy in on that and we know they're going to be successful, then that's the beauty of the model. We'll do very well.
I just add, I think it's a learning process, and we call it, as if I would call it, thinking like an investor. And it's not something that just comes naturally, because you can get excited about a business, but then you really have to stop and pause and have hopefully somebody with a dispassionate view of the business saying, you know, wait a minute, let's go back to basics. Is this really a good business to buy? And so it's great when searchers come and bring deals, because it creates a learning moment for everyone. And it does take some time for searchers to develop the nose of what is a good business that you would want to invest in. And once they do, then they're kind of on autopilot and can do a good job.
And I think the other thing, you know, to that is also is personalizing it. There's a lot of good investments out there, but is this really the business you want to run, you know, for the next 8-10 years of your life? And I don't know if all the time, you know, when they look at their first deal, if they really personalize it enough, right? And think about, hey, you know, I'm the person moving to Utah or whatever. I'm going to have to uplift my family, and am I really excited about it? And does that deal provide the upside for me? So as searchers go, you know, through the phase, they internalize a lot more of it and understand that this is not about what's a good investment to everyone else, but really what makes most sense for them.
I think we have time for one more question. Yep. Gentleman in the back.
I have a question. So, can you please clarify this assumption that searchers need an MBA? What portion of your portfolios have an MBA component, or a searcher that has an MBA? And also, do you see any interesting age demographical shifts with regarding searchers right now? Thank you.
I'll go ahead again. My father started investing in the early 90s, and it was sort of, you were either a Harvard or a Stanford MBA. That's kind of how it worked. And that has evolved dramatically, so that, to answer your question, I don't know if you need anything anymore. We have people all different ages, all over the world, with various backgrounds. Having said that, we're at Booth Kellogg right now, and I think having an MBA is extremely valuable, and I wouldn't say it's a requirement, but it's something we like seeing. I don't know if anyone else has any thoughts.
I have one other thought. Just as an industry, I think the industry has to get used to having non-MBAs as searchers. Otherwise, the industry is going to be relatively stagnant. because the number of MBAs going to do this is going to be finite. You have the top tier schools, they're going to allocate maybe a certain percentage of those students. Let's say right now we're running 60, 65 a year. That will generate about 30 deals a year, and that allows the industry to put about $200 million of equity to work a year. So unless that grows, the number of deals is going to stay the same. Maybe the deals will get bigger. Hopefully they don't, because it'll keep the multiple down. But we all should get used to having non-MBAs as searchers, because that's how the industry, in my opinion, is going to grow. I don't know if you guys feel like that.
I would only add just one other thing, which is, that there's a question of diversity of educational background. We're eager to see increased diversity in the search fund ecosystem, full stop. Of seeing more folks choose to take this as a career path to being a CEO, regardless of your background, whether it's educational, gender, or any other reason. And I think with that, we'll see even more great opportunities for the ecosystem as a whole, as investors, and certainly see more people who could be phenomenal CEOs and build really great businesses step up.
But as much as I love the diversity, and but the MBA is valuable because these CEOs are stepping in and they're a jack of all trades, right? One minute they're doing HR, one minute they're doing accounting. I mean, they're wearing multiple hats, and so I do think the MBA, that provides them a skill set to be able to jump around and wear all those hats. And you can learn that in other areas without the MBA, but keep going to business school.
And on that note, I think we are out of time. I'd like to thank our panel here.